We're live. Oh, look at Mitch. He's here too. Mitch is live from a Panera, I think. What's going on, man? And he's on mute too. I'm gonna move you backstage now, Mitch. What's going on, everybody? Good morning. Happy Wednesday. Welcome to Pre-Market Prep. Spencer Israel, Money Mitch, as you can see, Joel Elconin, and Dennis Dick. Man, we got a lot of headlines today. We're definitely going to talk about how the stock market did in May. Spoiler alert, we basically ended up where we started. But we got a lot of individual news. We got some earnings. We got some guidance. We got 3 different guidance headlines today. Delta Airlines just came out with some guidance like 15 minutes ago. So we'll talk about that. We'll talk about tech stocks with our guest, Sean Udall, the tech stock strategist, at 8:35. We'll do questions from the chat in ticker time after that. And that's it. So smash that like button, everyone, and let's get this show. Wait, Mitch says, oh, never mind. Mitch says, don't throw me in the back. Already done, Mitch. Let's smash that like button, everyone, and let's get the show started. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning. Let's bring Joel on. Let's bring Dennis on. Let's bring Joel's charts on. Joel, recap the overnight session for us, please.
Yeah, a little dip near the close, CRM little dip, and then the rip in the CRM and the rip in the S&Ps. Pre-market high 56.75, pre-market low 25.75. Just kind of hanging out here in the 41.40 handle. Crude up 88 cents at 115.55. Almost got to 120 yesterday. Gold's down 17.10 at 18.31.30. Silver right between 21 and 22, down 15 cents at 21.54. Bitcoin holding on to yesterday's gains. That's down 30 cents at 31.620. And let's call Ethereum futures just flat here in 1939. So we won't talk sports because we want to keep Dennis in a good
no
mood.
Sports talk.
No sports talk. But, I wish the market would have moved in May. It really wasn't much of a month, was it, Spencer?
Very slow.
Yeah, very slow.
No. The NASDAQ did close down 2.1%. So that is notable, okay?
Okay.
But the S&P 500 was basically unchanged. It was up 0.1%. The Russell 2000 was down 0.003%.
We had a scratch month.
Okay, so it was basically a flat month for the S&P and the Russell. That's not to say we didn't have movement, because of course we did. We if you think all the way back to like a week and a half ago, where we officially entered into a bear market in the S&P, but a lot can change in a week and a half, and we ended up basically where we started. As far as individual sectors, you guys know what was the winner last month. It was energy. Energy up 16% in May. That's the XLE. Biggest loser was discretionary and real estate, both down 5% in the month. Energy was the outlier by a mile, frankly. There was nothing. The second best performing sector last month was utilities, which was up 4%, and energy was up 16%. So energy just blew away the rest of the field last month. And yeah, that's kind of the story of the month. We ended up back where we started.
Well, then that just makes the close from Friday pretty important. 57.75, and our close was a little bit lower yesterday. But I tend to end of the month close is important. Friday closes are important to me. But I think overall, considering when we were at 3,800, we're looking into the abyss there. For the market to come back, and we held in there yesterday, so it's too
kind
early.
Of a win.
Yeah, I agree with you, Dennis. I
kind
agree
of a
with
win
you.
for the market because it could have been a lot uglier if the if it would have ended May 20th. It would have been like, oh my gosh, it'd have been a
Yep.
pretty ugly month. But
And
420, I mean, we're still there. I think that's still the resistance point. We kissed it in the overnight session when everybody was on holiday. I still think that's your resistance point in SPY. So I see like 50, 60 points of potential upside, and I don't know where they pull the rug. So that's why risk reward doesn't set up that well from here, at least from the long side.
I mean, the trend of weakness in tech did continue because the Nasdaq just had its second down month in a row.
Yeah.
Again, that Nasdaq 100 down 2%. So that trend is still clear. Everything else though was basically flat. I like this comment from Akchaz in the chat. Flat for investors, a dream come true for traders.
It was a good month for trading. I got my stats too, which I can now track because I never have been able to track that before. My trading month this is the day trading, not the long-term investment account. The long-term investment account moves along. I didn't look at the stats for that yet, but it moves along pretty much with S&P because I have so many stocks. But the day trading overnight account for May, mine was up 8.71%. So it was a pretty good month again for trading. So, which I think last month was over 9, so a little lighter than last month, but still decent month for trading. That's showing you the volatility, the chop. That does a lot of fading. It does a lot of different stuff, strategies that we talk about, mostly relationship based. That's like a relationship based trading, statistical arbitrage account, which is obviously, my bread and butter. So 8.71%, not a bad month.
I mean, 8.7% a month, a year, frankly, isn't bad.
Yeah,
but 8%.
Well, I'm working that money. If I'm only making 8.7% a year, I'm going to be in trouble. I ain't going to pay the bills because I'm working that money to pay the bills.
Yeah, I got you. But 8% a month is very good, all things considered. So you outperformed all the indexes.
A lot of work goes into that 8.71%.
Yeah.
It's definitely not passive.
That's true. Well,
Yeah.
Siri just interrupted our show. Sorry. Okay. Oh my God, Siri, stop talking to me.
Why is Siri talking to you?
I don't know. She's talking to me. I don't know what she's saying. Go away. Okay. Where should we start? You want to start with the Delta guidance that I know I'm going to go a little bit off topic here, or off the order of the side, but we just got Delta Airlines guidance literally like at 7:45 this morning, just completely out of the blue. So maybe let's start with that. They raised their total revenue guidance for the current quarter. They didn't even raise it by that much. They raised it by a couple percentage points. But basically the total revenue for the June quarter, now they see it in a range of $12.4 to $12.5 billion, which is up like 4 percentage points from the prior guidance number. So it was a slight guidance raise. And they said they see 13 to 14% operating margin increase for the June quarter and free cash flow of $1.5 billion. These are all slight raises from what they said a month ago in their earnings report. Anyway, how's the stock doing?
Charles saved me on that. He shouted it out when that press release hit, I think around 7. Well, we can go grab the exact time of it. You can see it got dropped in the general corporate statement at 7:45:59. Obviously, we summarized it there in the Benzinga Pro nicely a couple minutes later because somebody's actually got to read it. But Charles shouted out right away on the squawk. So thank you, Charles. I was actually short Delta Airlines into that drop. I covered some at 42, some at 42.20. I still have a little piece, but I hedged it. So I grabbed another airline against it. So I'm paired off now. Which is good news because obviously that thing blasted off fairly quickly. So, yeah, so it shows you, sometimes you can not only, does Charles sometimes make us money, sometimes saves us money. So save me a little bit.
Yeah, and that right there is why we have the squawk in the first place, because we don't expect you, and you can't be expected to be staring at your Benzinga Pro all the damn time. There's other things to look at. There's your actual.
I wouldn't have noticed if you wouldn't have shouted it out.
Right. There's your actual brokerage account. And there's your charts. There's whatever it is you're doing. Right. There's Twitter. So the squawk exists so you don't have to have your eyes on the pro at all times. So big shout out to Charles
Thank you, Charles.
Thank you, Charles.
One interesting thing about the airlines yesterday in Delta, you take note. There was bad news, over the weekend as far as all the cancellations, weather, whatever, staff shortages. But that ended up opening up at the low of the session. 40.70 opened down $1.50, only went 13 cents lower. So still had a down day. But rallied and actually exceeded Friday's high. So you're opening right into that area. They got a little excited. They took it up to 43. I don't really have anything on the dailies there. Maybe you got some paper stacked up at 43. There's nothing on the dailies until 43.74, but opening right into the previous day's high. Let's see if it holds and challenges 43. Dennis, I don't know. Can you see if there's any paper up there or anything, or too far away?
I didn't even look.
Okay, don't worry about it.
So I just want to say, and this is a good lesson here, what do you do when you're, on the wrong side of news? What do you do? And in this case, there's no hesitation for me whatsoever. I mean, as long as you're trusting Charles that he read it right, because I haven't opened the corporate statement, but he shouts out that they're raising guidance. I don't hesitate. I lift whatever offer I can lift. It's not like, I'm going to bid it up and maybe somebody's going to hit me. What you've always taught me at a very young age. They don't hit bids, when the stock's going up. So you just take whatever's there and try to save yourself money. You don't worry about losing money. I lost money on that trade, but you can't worry about that. You're on the wrong side of news. You're on the wrong side of the news. And I mean, it's not up that much, but again, it's hard to tell how they're going to react to some of these things. Typically when they say, a raise guidance, and it wasn't much of a raise.
The algos are going to lift offers.
Yeah,
they're going to lift off. Yeah, but the algos aren't that fast, Joel. I was a human being, and I was one of the first. If you go back and look at the tape, I'm 42. I don't know. I can't see that far.
Do you think it's because the algos have to see it in print where you're?
Yeah, I think so.
Yeah,
I'm not listening to Charles.
We shouldn't be. We shouldn't.
Yeah, the algos can't hear.
Well, they can probably. They can probably. It's probably some sophisticated.
Now we're giving them ideas. Now we're giving the algos ideas.
We're giving them those algos. Okay, stop listening, algorithmic high frequency traders. We're giving you more ideas. Turn off your ears, robot.
Anyway,
you got to lift some AAL, right, to offset it, correct?
Yeah, so what I do in that situation when I'm on the wrong side of news is I'm scrambling first. Can I get out of the position quickly? Is there an offer to lift? Sometimes pre-market there's nothing there, so then I'd have to naturally go to a hedge. But there was a little bit of 42, and then the next offer I got some there, and then I'm 42.20. So I'm okay, boom, I got some there. Still wasn't enough for me to hedge. So then I went to AAL, and I actually was able to pick up AAL. I'm doing this all in a matter of about 5 seconds. I went to AAL, and I was able to lift some of 17.90. So then I got myself hedged. I'm already out of the hedge on AAL, and then I lifted another airline as well, which I've still got a little piece of that. So I'm hedged off now. But I mean, that's what you got to do. It's damage control. I probably make money consistently, not because I'm very good at picking my winners. It's I'm very good at damage control. When I'm on the wrong side of something, I'm quick to get out. I'm okay, I'm wrong. There's news on this. Okay, I don't know what's happening here. This is up for interpretation. I don't want to be part of it. All of those things save you money as a day trader. As a long-term investor, completely different story. But as a day trader, it's all about damage control. And you will not be successful in the long run if you're unwilling to cut losers. It's 100%. When people ask me why it's successful, it's 100% discipline. Because if you're holding on saying, I can't take a loser, you will eventually have a portfolio of losers. You will not. I can almost guarantee, if you are unwilling to take losers, I can almost guarantee you will not be successful in this business. There's no guarantees in life, but that's a pretty darn close one. Have to be able to quickly admit when you're wrong. First, identify when you're wrong. Then second, react. Quick, to get out, when you're on the wrong side of news or, on the wrong side of the trade. And so minimize your damage as much as you can. If you're on the wrong side of the trade, there's going to be damage. Minimize it. Minimize it as best you can. There's sometimes, there's not much you can do in the pre-market, especially if there's not an offer for your stock. So it's important not to panic either. But you've got to kind of have an idea of what something's worth. When something raises guidance, I'm feeling if I'm buying it up 1%, it's probably, it's probably going to go up more than 1%. In this case, it's not much in Delta, but it could have been easily a big guidance raise. And the stock could be up 3, 4, 5% on me. I didn't know at the time. Charles shouting, I'll raise the guidance. I'm I'm out of here. So that's the biggest thing as a trader, a day trader or short-term trader. minimize damage. That's how you'll be successful.
Dennis,
in this
people don't.
long
There's
run.
no lose. No.
Well, I know that's what they do all
There's no
wrong.
losers on Twitter. I mean,
you can't take a losing trade.
Well, the other thing too that I talked to you about over is like when you have a trade. Let's say maybe you could have shorted more delta and had it come in or whatever. The stress of that trade, you're done. You're done with it. You're out. You're moving on to the next trade. Not everyone does the volume of trades that you do, but just psychologically, well, hey, whatever. I got caught. There was news. I'm out. I'm flat. Now, next trade. What's going on?
That's it.
And
move on.
Yep.
There's going to be damage. When you've got, I had a late night last night, but I had maybe like 45 overnight positions. You're going to get hit. You're going to get hit with news on the wrong side almost every day when you have that many positions. And you guys don't have to do that. But even if you have one overnight position, the odd day you're going to come in just by random bad luck. Delta wasn't scheduled to report guidance. That's random.
No.
So, you could randomly be. I try to avoid news that's scheduled because I don't want the coin flip of it. But in some cases, there's nothing you can do. You're just on the wrong side of it. There's news, and you've got to just react and do the best you can.
All right, we got a lot of individual movers here, so I want to go back to the rundown and go to Salesforce because this is your big mover. This was kind of the big headline
for sure
yesterday after hours and until this morning when we got a bunch of random guidance, and there is more guidance. We'll get to that later. But I want to do Salesforce here. Earnings per share, a beat for the Q1, 98 cents versus 94 cents on the estimate. Sales, 7.41 versus $7.38 billion. Their Q2 EPS guidance came in light. Their Q2 sales guidance came in light. Their fiscal year EPS guidance came in above estimates. Their fiscal year sales guidance came in light. So most of the guidance there was light. Their earnings was good. Most of that, they gave four guidance numbers, and three of them came below estimates. So,
wow.
Stock was beat up into, and in the setup here, and then I'll let you do the technicals, Joel.
Sure.
I mean, the setup, this was a low bar because not only had it not really recovered much in the recent rally, it got smacked yesterday with the gross sell-off. And yesterday we did have a gross sell-off. Growth massively underperformed. You can see stock opened strong yesterday, closed very weak. So expectations were very low here for CRM. So first set that, bar, and that bar is very low. So when they come out, and it's okay. Like Spencer is saying, this wasn't, a blow it all away quarter, but it wasn't a miss. 98 versus 94, a beat slightly on the top, slightly on the bottom. And the guidance was actually a little bit light, but, they were looking further out and they're saying, well, they did too. They did the Q2 guidance was a little light, but then they did the fiscal year 23, and that was a little bit, 474 to 476 versus 465. So that was a little bit better. It was kind of smart by Benioff to do that. Okay, well, we're going to be light next quarter, but let's give them a little better guidance so they don't just hammer a stock on light guidance because he knows these news algos will just hammer when they see guidance miss. So, I mean, the quarter wasn't great, but it was good enough. And that's why you're seeing the stock rally fairly significantly this morning, 8%. So we'll throw it to Joel on the levels.
Yeah, boy, if you were just keeping an eye on the lows of the move, 54.55, 54.73. That's where the 54.64 triple bottom down there. So if you were just like, okay, I'm just gonna go out there at 54.64 and see what happens. You got a good fill. You weren't too happy. Wow, monster volume. Holy mackerel. 3.6 million shares traded when it traded down to 154. Yep. Also, I'll just say, I mean, it was kind of a mixed market yesterday. We did have a soft near the close because of the end of the month. But you know what? Like the market environment is just a little bit better right now. Right? We're off the lows of the move. Yep. People are looking like growth is coming back. It's a little bit, did I miss the low in the S&P? Did I miss the low in Apple? I'm not long it. Well, no, maybe I can pick up this at the low of the move and see what happens. And I think just the market environment, now it's up a lot. Now I don't know what the heck to tell you to do. 175.44 pre-market high. I got nothing on there on the dailies. If they just want to pound it to the shorts, the next daily high is 182.24. You can hold out for that. I'm not going to say it's not going to get up there. That'd be one heck of a move.
180, massive resistance up there.
Yeah.
That's a long ways higher here, but it is up $14. Another $6. If I was long this, I'd probably be selling into this because honestly, this report wasn't that great. It's just a matter of was it good enough? up 8.9%. Stocks go up 8.9% on okay quarters, often start to leak. So I'd be inclined to probably take the gainer here. Moving the entire tech sector, really. After CRM's earnings, we saw Microsoft gets a lift, and then that starts to go into other stocks. So it's funny how the slippery slope, CRM moves Microsoft, which moves all the cloud stocks, which then the cloud's moving, and then all of a sudden you got a little market rally on your go. So that's how CRM is very influential. The same way Snapchat, the slippery slope again, when it missed, all of a sudden they're like, okay, well, we got to hit Facebook and Google. Oh my gosh, if we're hitting Facebook and Google, we're hitting the S&P. Now we're hitting everything. It's the slippery slope that the algos drive. And in this case, it's to the upside slightly.
But has markets been like that lately? We got snapped. I mean, we got Facebooked one time too. I mean, it's really
all interconnected.
Yeah.
And somebody was just asking me, how I pick my trades. It's almost all relationships. Understanding that when I see Snapchat, I would go and right away I hit when Snapchat missed and or announced that it wasn't even like a miss, that was just a random guidance.
That was just a guidance. That was a guidance.
Yeah, 4 weeks and I was on the wrong side of that one too. I was long Snapchat on that. The first thing I do is hit any bid on Snapchat I possibly can, but then I turned around and I hit Pinterest. And then you start hitting other stocks. You hit the market. You hit what you can. If you can get Facebook, Google, those are all good too. I mean, I'll trade the relationship, the sympathy off of that move. The algos will too. Don't kid yourself. The algos are all over it too. But there's lots, there on something like a Google or something like the S&P itself, there might be a little bit of algo hitting, but it's not as quick to react as you think. There's this belief out there that the algos are so perfect. There's no way to beat them. There's no way to, trade against algorithmic trading. And it's just not the case. There's still a place for, a sophisticated trader that gets educated over the course of time on relationships. So the majority of my trading is based on understanding those relationships. And some of them are very basic. I mean, Delta beats, grab the other airlines. American Airlines says
raises guidance. Yep.
Yeah, or raises guidance. In that case, it's not sleeper. Grab American Airlines because the algos might be buying Delta right now, but they're, and maybe they're going to eventually move to the sympathy trades, but they're not as quick as you think. So, not saying you can, it's always the case, but in some cases, the algos aren't as good as you think they are.
What about HPQ here? Because they also reported last night, and this was a better report because they beat on the top line revenue, they beat on the bottom line earnings per share, and they raised their guidance. Granted, it was a raise by a couple cents.
Yeah,
but a raise is a raise is a raise nonetheless.
I mean, the stock is cheap. It's trading like 7 or 8 times earnings. But again, it's a PC
value trap. Come on.
Well, it has been, but Warren Buffett has fallen for the value trap, and it hasn't really been a value trap. I mean, this stock has held up better than any of the other ones. I mean, look at where this was a year ago. This was at like $26. You try to find a stock, going back a year ago or a year and a half ago, that's actually, still holding green besides oil stocks. There's a lot of stocks in the red. So actually, you could say it's a value trap, but it's actually been a source of value. I mean, it's doubled since the end of 2020. So, I mean, this has been, a really good performer. And if you're just trading and owning value, I mean, this has been a really good stock. I had it once in there in my longer term portfolio, and then I sold it, and I wish I would have put it back in. HPQ has been a pretty good performer.
Boy, if you were cat quick on this one, you would have, when they hit it on, you had a gap fill. You had a high of 36.96. I don't know. Oh, this was on the Dell earnings. That's why I wasn't expecting like a horrible report on this one because of the Dell reporting.
That was a good thought, Joel, and it ended up being the right one.
Yep. Yeah. And then you filled the gap just really nicely. Wow, you went to 36.84. I don't know what it did first. I don't know if it went down first or up first. But man, this area right here, and I know I put 40.16, but like when I see 1, 2, 3, 4, 5, like 6 highs here, I'm gonna move this bar down here. And the only reason I'm keeping an eye on this is like 39.72 to 40, is because when it got up there, it failed it failed miserably here. It failed miserably here, even more miserably. I mean, market conditions had something to do with it. So that'd be really impressive if this, got into the 40 handle and held. I know there was a downgrade one time, but it lost altitude the last 4 or 5 times it's up here. Let's see if it can bust through today and hold 40.
We'll rip through the rest of these real quick. Ambarella. Sure. They beat last night their reported EPS of 44 cents versus a 36-cent estimate. Sales of 90 million. Sales was in line. The revenue that the guidance that they gave was a little bit light. So we're seeing a lot of these where like the backward looking numbers were good, the forward looking numbers were okay, not great.
You got buy the dipper mentality here on everything that's techie right now. I don't know if it's going to work out in the case of AMBA or not. Like on Nvidia, on a really widely owned stock, it was more, or Costco in the case of last week, you kind of felt like the big names the money managers are going to come back into. Ambarella is not like a huge name that every money manager wants to own. So do they come in to buy the dip? Maybe some people will, and they think they have. So it wouldn't surprise me if it turns it around, but it's not as a slam dunk as like an Nvidia was last week on the buy the dip.
Oh man, I mean this is a tough one. They slammed it down to 73.23. You're not going to see that. I mean, can't guarantee, but that's quite a bit. $7 off that. Resistance, man, you're far away. I'd say for at least next couple days, you got to look at that low from yesterday, 84.59. And man, here you go, looking at your dailies again. Dennis, this is what I want you to program after the close.
Right.
When they slam something, find the daily low. The daily low on Thursday was 74.23.
Really hit it, eh?
Yeah. They hit it to. I mean, you'd have to. The only way you're going to get that is sticking your bid out.
But you know what happens when your bid sits there at 74.23? It trades to it, and then you don't get it.
Really?
It prints your price.
I think they would.
It's got to trade through you to get it. Welcome to office.
Well, the low was 73.23, Dennis. So you would have gotten it.
Okay.
You just would have been down $1 on it.
Yeah.
We're rallying here. We're up 20 handles. We're back up in the 41.50 handle.
CNBC has finally picked up on the Delta. They're talking breaking news. Delta ups guidance.
So did it move even
40
more?
minutes later.
No. Now it's selling off.
Sometimes what happens, it's funny, the news happens, gets the pop, and then it pulls back in a little bit. And then all of a sudden, like an hour later when CNBC breaks the news, because they're an hour after us, then you'll see a CNBC pop off of it. So it's funny, sometimes I've actually seen the case where, it has news, comes back in, you're like, oh, it's going to, then you rebuy it and you sell into the CNBC pop. So anyways, just giving you lots of little tips here this morning for trading around news.
And then someone in the chat said you can't, and I'm paraphrasing now because I forget who said it a few minutes ago. They said you can't treat all tech the same. Well, the same can be said for any sector, especially retail. You can't treat all retail the same. Look at Capri earnings here, CPRI. They reported this morning, and they just absolutely blew it away. The bar, I guess, was low. I don't know. Maybe the bar was high. I have no idea. Half these reports are terrible. The other half are unbelievable.
Right.
This one was unbelievable. Okay. Earnings per share, $1.02 versus 82 cents estimate. Sales, 1.49 versus $1.41 billion. Guidance, forward-looking sales guidance for the year, basically in line for sales and for EPS. And then they announced a $1 billion buyback as well.
They kind of said everything right. And it was actually interesting. The only thing you could probably have problems with is 23 sales were a little bit light on the estimate, but they said the earnings were going to be good. So that's the only thing you could really see bad about it. But it was interesting because it ran up on the algos, the stupid news algos, because they just buy everything, bought all the way up to $54 on the print. Ugh. And then it came all the way back down and it went 49 offer. And I'm like looking at this, and I was like, this is a pretty good report. I'm like, they're going to take this thing red. I'm like, and they were trying because it went 49 offer, and then they lifted the 49 offer, and now it's back up again. So, I mean, so in hindsight, Capital's 2020, it would have been a buy, that 49, just on the interpretation of it. But don't tell me the news algos are awesome because, man, they overpay for, it seems like, everything.
Top of yesterday's range, too. 49.34. So they took it, the little gap fill there. Nothing at 54 for you. What are these pair highs here? I'd reset it 53.30. That's still $3 away. So you got some heavy lifting to do there. I'd give that. I'd even look at 52.20. But coming back on the downside, the pre-market low, pretty good low, fits right into yesterday's range.
And I guess we might as well just touch on a VSCO, Victoria's Secret, which also had earnings out. This is last night, and they beat on the top and the bottom line. And I know the bar is low because this has been an underperformer basically since birth. But I mean, look, it's up a couple of bucks this morning. I
You
don't
still
know.
got this one, Joel? You had this for a
Yeah, I
while.
do. I see.
This was the spinoff from what was the company?
Victoria's Secret.
Yeah.
No, but what was it before?
Well, L Brands.
L Brands.
L Brands.
Yeah.
And L Brands spun off into Victoria's Secret, and what else?
It's
BBWI.
BBWI. Yeah.
What else
Bath
do I
and
own?
Body Works.
Yeah, Joel.
I yelled at you on that L Brands investment forever, and you absolutely were correct on it because it came back and kept going up and up and up, and I was like, I don't get it. And then they did the splitting the two companies, and you know what? It's actually
I know
they've been dogs here for the last year, but when you were
I've had
buying
them for
they
a long
they were
time.
pretty solid.
Yeah,
So I'll give you props, man. You were making some money off those.
I think we bought that in like the lower 30s, and this is back when it was LB, and it went into the 20s, and then it came. I don't even know. I hate when you can't sell it because you have to figure out your cost basis and like who the hell.
There's another. Now I want to pay the tax, but I can't figure out the cost basis.
I know. I hate that, man. I think I'm still trying to figure out my like AT&T, Lucid, Southwestern Bell.
Never sell because then you don't have to figure out your cost.
GTE.
Basis.
What else was there? I don't know. There was a couple other things that accumulated into that, but all right. Is that so?
That's for the earnings, yeah. But then we had some guidance, some more guidance in addition to Delta Airlines. This one caught my attention. SPGI, S&P Global, a stock we very seldom discuss on this show because it's a kind of a stodgy financial company. Anyway, they came out this morning and they said they are suspending. Not cutting, suspending their guidance for the year due to, and I'm quoting here, extraordinarily weak market conditions for its ratings business. That is unbelievable. I guess
don't
no
care
one
as much about ratings now.
No, Dennis, not analyst ratings.
Bond ratings. Bonds.
Yeah,
I know what they rate.
Okay,
this is credit.
Yeah,
it's their main business here.
Yeah,
but. Shockingly, I mean, this is triple B, this is triple A.
Dennis, no one's
I got triple A.
No one's raising debt. No one is issuing new bonds. Why would you want to do that in this kind of a market environment? Bonds have been it's the worst year for bonds since
it's a bond stock.
This is the worst year for bonds since the Civil War.
It's kind of a bond stock.
I'm not buying the dip on this one, man. I don't care what this is. It's down 33.5 bucks.
303. Joel, that's the 2021 low. I went to your levels and I found it.
Okay.
303.
All right. You might get it. You might get it.
If you're striking before then, you're early. 303 is the bounce level. 300 bucks, I think it bounces at. First time down there, I'm calling the 300 bounce.
Okay.
If it gets to it. But, yeah, it's not going to my long-term portfolio either.
And immediately, when Spencer mentioned this, I went to Moody's, like what's going on with Moody's? And Moody's is, boom. This is near the low of the move. So you do have some identifiable support. It's actually below the low of the move. That was 276.79. But you're suspending. I mean, that's just.
It's never a good thing.
Never wait. Someone at Guy Ben Gurion Airport asked me, while you're at it, please explain the blacklist that pops up over the charts. That's my data window on TradeStation, and that's how I pick out these levels. And I keep that up more than anybody. And I have been on customer service with TradeStation for 5 years trying to figure out how to just keep it open and keep it in one place.
Yeah.
And they haven't been able to figure it out. So when it pops up here, that's where I get my volume. That's where I get my levels. So while I look at a chart for like this MCO, I look like, okay, trading down. Okay, what's these pair of lows here? Boom. I look, it gives me the exact numbers. So I hope that answers your question.
All right. Last guidance headline, a lot of random guidance today. Totally out of the blue. DoorDash just raised their guidance. I think they did so in connection of an acquisition they just made, but they said that order frequency and average order values are both higher than expected. So they just raised their Q2 sales guidance.
Does
So,
this have a path to profitability here? Are they showing that they're going to make money eventually? I mean, I like the concept of the business. It's just a matter of the valuation was always absolutely insane.
Yeah.
So if it ever comes down to a reasonable valuation, I would buy this stock. I mean, you think, oh man, this stock was $257. It's $70 now. Must be reasonable now, but I don't know if it is. I think it's still a matter of still losing money. So it's tough. I mean, it's oversold. It's holding up better than some of the other ones. In the last couple of 4 days, we've had a nice 4-day rally here. So this helps as well. But I'm not chasing DoorDash.
I should have known this one. I should have alerted our investors that I did have some inside information on this.
Uh-oh, what'd you have?
My brother-in-law mentioned that my nephew last month ordered from DoorDash 24 times.
What?
Oh, man.
Yeah.
My buddy DoorDash is everything. My buddy
24 times in 1 month?
24 times, yeah.
There's a
Yeah, I
lot
hope
of
he's not listening.
DoorDashers.
That's once a day, basically.
Yeah, basically.
My buddy DoorDash is everything. He DoorDashes a meal, and then he DoorDashed ice cream. I was like, how do you DoorDash ice cream? How's that
No
work?
way, because they have little coolers, right?
That's
That they put it
impressive.
in.
I'm like, you're DoorDashing ice cream. How does it not come to you all melted? I'm like, he doesn't have ways. I was like, wow, that's impressive.
Yeah.
Man, I'm looking at this chart. First of all, it's not really moving off this. So, I mean, it's up 79 cents, but look at that. Yesterday's high, 81.44, a couple other highs in that area. That's pretty major resistance. So get above, I think you got some room up to there. On the downside, yeah, if you could get it in the lower 75s, there's a pair of lows there, 75.33, 75.51.
All right, let's bring on today's guest. Let's talk tech. I wonder if he has an opinion on DoorDash. He is the tech stock strategist, aka Sean Udall, joining us here on PreMarket Prep. Mr. Udall, good morning, sir.
Good morning, Benzinga.
All right, so I got a little Sean story. You guys may have heard it before, but the guy's been trying to call bottom and a lot of stuff for a long time, and with okay, but no, you called the top two. I know you've been conservative, but on this was it this day here? It was a Friday. Yeah, it was the Friday, and the SPOOs were down major. They'd made the new low of the move that day, and he sent me a text and he said, we're going to close green. And that was one of the afternoons that I decided to take off and go see that stupid movie and put a little buy stop in and ended up getting taken. And sure enough, the SPOOs ended up green on the session. And it's one of the best calls. I want to congratulate you. But now my question for you is like that low that we hit in the S&P. I know you're going to talk about a lot of other stocks, but is this like a low of lows that we can lean on? We're going back up to 43, 44, 4,500, or it was just a dead cat bounce in a bear market.
Well, I mean, it's an interesting discussion, one, because everybody in the world has tried to call too many lows, and they started trying to call lows in like January. So, and I definitely was not guilty of that.
I agree.
I would say that, so 2011, I don't think the third low held. We had a W bottom. 2008, there's no way the third low held. 2018, third low held. 2020 is hard to say because it was so jumbled. But there is a history of the third, and this is not like a third minor. This is like the third major low. So we have put in a third major low. I'd basically say January, then the February, March, and then now is the third low. Maybe the best thing to say is that there's nobody in the world, including myself, that probably believes that this low is going to hold, and they think it's this is more of a traditional bear market rally. And one of the reasons I'm leaning that way, I'd say odds are leaning that way, is we just keep jumping too much. We keep going up too much too quickly off of the low, and that is not typical of what a true low looks like. I think people get confused because 18 and 2020 were not traditional market lows at all. they were very unique. Even in history, they're very unique lows. COVID low is the COVID low. There's no other low that looks like it. And the 2018 low was basically a low that probably would have morphed into a really good market low. But the Fed kind of came in and basically reversed course. It's just that everything about that low was really unusual. Even the start of it and the severity of the correction in 2018 was unusual. So anyway, the bottom line, long-winded answer is, I probably believe that this low has a better chance of holding more than about 99% of the people that come on CNBC. But I'm going to say it's probably a coin toss. The action doesn't feel like it, because again, we're within 4 days, we were again 1,100 NASDAQs off the low. That just engenders algo raids and stuff like that afterwards. So the individual stock action, though, which I've been, Joel, you and I on Fridays have been talking about, has actually been a little more telling, because the individual stock action has been far more severe than the indices. Yeah. So I don't know how much you want to talk about market lows. It's a parlor game. Anybody can guess it. I will say this: I've been trading for 2 weeks and trading long, and trading's been very good. I think we have a window. And I think this is one of those windows I think we can aggressively trade. And then I would say if we do make a lower low from the May low, I would say you have a real good chance of whatever that low becomes. That probably is the low that holds.
And what do you want to see now?
Like multi-year durable.
I mean, I know.
What was that?
People ask, well, first question is, do you look lows on the weeklies or the dailies or the monthlies? I mean, I think they all kind of lean into each other, but what do you look? Do you look for the weeklies? I know you have some of your proprietary indicators that you look at.
Yeah,
but,
I mean,
what's your go-to chart?
Sentiment usually works better. Sentiment has not worked. Sentiment gave a lot of false lows early in this. I mean, honestly, when things get really ugly, you got to get the S&P down. And I don't want to be like master of the obvious, but I think you'd all agree, Dennis would agree. So when we had these prior lows that didn't hold, the S&P was only down like 13%.
Yeah.
And it doesn't matter that 50% of the NASDAQ is down 50% or more. If the S&P is only down 13%, you're probably going lower. And so I kept saying I'd feel a lot better if we were down 20% or more. I must have said that 60 times. Well, we did finally get to minus 21 intraday. And so far that has held. And that was the indice that kind of the index that basically hadn't done the work. The NASDAQ was down 32 to 35. Geez, the IWO was probably down 40%. I think we got to about 65% of all NASDAQ stocks were probably down 55% or more. So anyway, everything was there, but the S&P was down like 13.2 or 14.1. And then we finally got that last low that took the S&P down minus 20%. And it's interesting, stocks have acted a lot better since.
Sean, there's a question in the chat. Do you prefer weekly lows or daily lows?
I think it's the same, because I think you're going to put your chart on multiple time frames. So I would just say you need a chart structure and a pattern. Again, the reason I mentioned the third lows is because everybody kept trying to call a low the first low or the second low, or there wasn't really a firm third. I mean, you look at a chart now, look at a daily, you can even see it on a weekly. There's 3 distinct lows compared 2018 to now. Again, I think this is going to be more like 2016. That was a W bottom. 2011 was a W bottom.
Do you think we get a retest?
Yeah, that's my guess, but I don't know. I don't think you want to spend too much time making your trading career on trying to see if a low's in. You know what I mean? I think you're better. Hey, okay, you could look at Dash. You know what I would say? I don't know about Dash, but I would look at Uber. That Uber chart looks pretty good. If you're looking at, I'm not in Uber, but I look at that Uber chart. That looks 10 times worse than the indices do. But you do have a pretty decent little structure now. You basically, I think what's going to happen to Uber, you're going to have an inverse head and shoulders pattern. So the left shoulder was the March low, basically. The recent lows probably hold. It went to a lower low after the March low or the May low. So now it's kind of grinding higher. So this is one where the NASDAQ, has already moved up 1,000 points or whatever off lows. What's this thing up? 2 points off lows? So that's what you want to see. You want to see stocks that are up a little, but they're not surging. So that's the other issue too, is like Nvidia's hugely off of their low already.
Yeah.
CRM's going to be a big move today if it holds. That to me, that's the biggest issue. Is you get these Shopify. There was one day Shopify was up $88 off the low. I don't know. I want to see that stuff kind of moderate and like have if Shopify starts grinding higher, I could probably get pretty bullish on it. If Shopify keeps having these days where they randomly go up 88 points off of a low,
It's just too much.
I don't want anything to do with it.
You don't want to see it too much too fast.
No,
because then that's catching people and FOMO comes in. And
well, you're right. Well, here's exactly what happens. People say, "Oh, I'm going to miss out." FOMO. They chase it. They chase like the third or the fourth or the fifth day high, and then they get stop run. I mean, the algos just come in and mow them down. And so, two things either need to change. Either you need buyers who are not selling a share. So you change the shareholder base, right? The old expression. So if every buyer of Shopify at 335 is not a seller of it at all, well, then guess what? It's going to hold a lot better. But if every buyer of Shopify is going to exit, if they're down $8, then you're going to keep having these lows are going to keep getting retested, at least in my opinion.
So, Sean, give us a couple more picks. I mean, you're kind of wishy-washy on Uber, but you kind of like it. Shopify, you'd like it if it didn't blast off. But give us a couple of things that you are nibbling on, if you are nibbling on anything right now.
Oh, yeah. No, I mean, MQ's been very good off of lows. Now, their low looks real firm. They supported that low with an earnings release, which was very good. The market tried to test it, really tested the resolve of the longs. And the longs basically said, nope, not selling. And the stocks acted good. I think Affirm's 100% off of lows. In fact, I think the last time I was on Benzinga pre with all you guys, I think I said I liked Affirm. It may have been around 25 at the time. It may not have been, although it could have been a lot lower. I can't remember the date that I was on. But the two last lows we had, Affirm looks like a leader. It basically went 100% off of both lows. Again, I don't necessarily love that's moving that much, but the fact that it's gone. I mean, the May low or the March low, it went up about 100% plus, and it held it for like 3 or 4 weeks. I mean, basically, it didn't relent until the whole indices went to lower lows, and then Affirm went to lower lows. So I think that's some indications. So some things like that you want to look at. I like cybersecurity right now. We have 2 reports, I believe, coming tonight. Is Sentinel-1 tonight? You guys can double check.
Sentinel-1
is Okta tonight.
Oh no, Sentinel-1 was last night.
If it was, I thought Sentinel-1 was tonight.
Oh wait, no, I think you're actually my mistake. I think you're right.
Yeah.
We have C3 AI tonight.
Okay, that's not cybersecurity. That could be, again, my best trades the last 2 weeks have been coming off of raids. So like MQ was rated, it wasn't maybe down much the next day, but it wasn't up at all. I want to say I was buying that at 625 or something. And it was just shocking it wasn't up because, man, did they deliver. And then, within a couple hours, it was probably 758 and climbing, and it's kind of been grinding ever since. But Sentinel-1, I think, would be very interesting. I think they'll have the typical. They probably beat by a little bit. They probably guide higher by a little bit. They probably raise full year guide by a little bit. You might have some people go, oh, the growth was sort of disappointing. That's what I want. So we'll see. If there's a raid to trade, I would like that. Okta would be nice to see a post EPS raid. Either that or
Okta hasn't bounced at all.
It reports Thursday themselves. They might have had a security issue themselves. They they themselves were hacked or something. And sometimes those things, sometimes those things can kind of linger on a stock for a while. Here's the thing about Okta, though. Should it have bounced really much? This was by the way, this was a top 20 stock of mine years ago when it was $26. Years ago. I mean, that might have been as early, like 2018. By the way, might have been not that long ago. I think it was probably an IPO in 16 or 17. Anyway, Okta probably shouldn't have bounced yet. That stock was up so much. I mean, arguably I'd say Okta was probably a bubble. It wasn't as bubbly as other stocks, but it was at its own, probably the whole cybersecurity space was a bubble. So
is this a point though now, cybersecurity? I think you're right. I think the cybersecurity stocks were all a bubble, but and they held up, it felt like forever, and now they've gave way too. Is there a point in time now where we should just maybe jump into a hack and just buy them all?
I was just going to say, you don't have to buy each of these names on its own. There's hack.
That's what I'm saying. CIBR, baby, let's go.
Well, there's a couple. I don't know the ETFs. I know hack pretty well. In fact, so one of the things I've been talking about too is here's my general view. I think now is the time you want to load some software. Loading is I'm being pretty aggressive on it. Loading for some people might be a little bit, but I think the key is you either got to do a field bet or you got to do an ETF. So you got to say, hey, maybe I should do hack and maybe I should do cloud, CLOU. So cloud will give me a few cloud stocks and hack will give me some cyber stocks and I'm covered. Or somebody like me, I might hit 3 or 4 or 5 names from each group and kind of do 2 field bets. And that's kind of exactly what I'm doing. But I'm being a little more proactive. I'm trading as actively as I've traded, since about 6 or 7 or 8 months ago, because I basically didn't trade for about 6 months because there really wasn't much to trade. I should have been shorting more, but that can't do anything about what I didn't do.
It's hard on the short side too. I mean, because swing trades. I mean, I do.
Dennis, I know a lot of people who were shorting the whole way down, and you know what? They didn't really make any money.
Yeah,
because they'd short. And then they'd get scared.
Squeezes happen.
Exactly. There'd be a big burst, and they basically take a short-term stop, right? So the people that made money shorting, you basically had a short like at the end of last year, and you had to hold the short. If you held the short for 3 to 6 months, you crushed it. And I did have some shorts. I just didn't have as many shorts as I should have had. But yeah, I think ETFs and software, so something like CLOU. I like your hack. I think the hack portfolio is pretty good. Spencer, did you say cyber? Is that CIBR?
Yep, CIBR.
I don't know what their top 10 holdings are, but let's say if it's Crowd, Okta, Sentinel One. Here's the one name I don't like. I would not buy Palo Alto Networks. I just think that's that is a stock that still is one of these wishy. Like if that stock was a lot lower and had put in a better low, I think I'd feel better about making a firm we've hit the bottom type call. There's still too many people chasing favorite names and stuff like that.
All right, Sean Udall is the tech stock strategist. You should follow him on Twitter. I'm putting his Twitter handle up on the screen right now. There it is, twitter.com/UdallTechStrat. Sean, always appreciate your insights. And for the record,
Love it, guys.
Palo Alto is the second largest weighting in CIBR. So there you go. I guess an answer.
Can't win them sometimes all. You got to take one. If you like the whole portfolio, you're never going to get an ETF that's perfect for you. You kind of got to. But if the group moves, and by the way, I got to close with this. The story about Dash before I was coming on, it was lucky I was not drinking coffee at the time because I would have spilled it all. I mean, that was 24 times. That is basically every day. I mean,
not healthy.
There's some hardcore dashers out there.
There's no way that's
oh man, I hope he's not listening.
There's some hardcore dashers out there.
That if you had like 40 dudes like that, that could be enough to turn the tide for I'm saying 40 dudes like that per city. But yeah, I you know what? I've never used Dash.
Yeah.
Not once.
Yeah, I don't want him touching my French fries. On that.
Oh, he thinks they're gonna eat 5 of his fries.
Yeah, but
hey, guys.
For you guys that like Sean, he joins me every Friday on PreMarket Prep Plus, and we battle it out, cover the stocks on both the long side and the short side. So Sean, appreciate your input. We'll check in with you later on.
Thanks for having me as always.
All right.
Okay.
Thanks, Sean.
Let's close out with some ticker time here. Somebody was asking about AMC a while back, and this had a very interesting day yesterday. Opened nearly at $17 and then proceeded to give back all of the gains. This was the biggest mover of Tuesday's pre-market session. gave back all those gains in the first half hour of the trading day, and then settled in a little bit. But
classic sell on news trade. It was a classic sell on news trade. I think that I would, at $16.13, which was the high, we know it was like 17 pre-market or more. I think you're selling rallies into AMC. I mean, it hit my $10 price target. Remember, it was 51, and I said I think it's eventually going to be $10. This was last year, and I had like a bazillion apes that wanted to kill me when I said that. It hit. It hit back down to $10. It actually bounced off $10. I'm not going long. I mean, the valuation still doesn't make any sense even at these prices, but the GameStop AMC the GameStop still is resilient and continues to hold up, and it keeps getting these squeezes. It does its own thing. So, I mean, this stock can do its own thing too. Can have more squeezes, sure, but not good news that it comes out that big and then they sell the news right away. So, makes me think that the path of least resistance is lower.
No comment.
No comment. You can't comment negatively on AMC because they all hate you for it.
Yeah,
that is true.
They hurt my
knows how this
feelings.
rolls.
All right, what other tickers do we have? I'm looking for tickers that we don't normally talk about on this show.
You know what? Before we do the tickers, just a
Yeah.
couple of things that Sean mentioned. I own this MQ higher. Would like to see it bust above 1120. I mean, that's like a solid top there. So that's going to keep a lid on the rally. And then Sentinel 1, I mean, coming into the report, you got a great number there at 27.25. So I just wanted to just comment on those. So where do you want to go?
Well, we should mention Amazon, if only because it's got
we
this,
missed this.
it's got
We
the
missed this
split
one.
on Friday, so keep an eye on that today. Doesn't mean the move is over, but it had a great day yesterday, so I just want to mention that. Here's one. When's the last time we looked at Visa? Have we looked at Visa recently?
Let's sell it. Let's come back nicely from the
Yeah.
lows. MasterCard, I still own the piece. This is, again, they trade in waves on you here, and you just waved up big time on Visa and MasterCard. I think it's a good selling opportunity. So I think, again, not that Visa and MasterCard are bad companies. They're fantastic companies, but the valuations aren't cheap, and we're still in this overall bear market. In bear markets, you want to be selling the waves up, and this is another wave up. So I'm a net seller of stocks right now in the recent wave up.
215. Yeah, it sticks out like a sore thumb. Up $1.51 and not much volume, but prove to me you can take out 215.
All right, John Fernandez. Have you seen Pilgrim's Pride (PPC)? Well, not recently.
Eat more chicken.
Wow, chicken.
That's what's happening. People are eating more chicken, apparently.
Call me chicken. Wow. That's unbelievable. It's all-time high. Is that an all-time high?
No, you got the 38
it's
bucks during
2017.
the
No,
chicken
the all-time
scare.
high is $41 from
Wow.
right before the Great Recession.
I don't know. You can't argue with the trend. Trend's your friend. Take your Jeff Mackey purple crayon. Hi, Jeff, and draw it all. So now you're like stopping yourself out at 30 or 31. So gets above 34 and then it's breaking out here again. So trend is your friend.
Matching range days, pretty much. Not an inside day, but just a little bit of an outside day. So see if you can bust through those pair of highs at 33.80. 80 area, and if you take out the pair of lows at 32.85, you got a little bit of downside. Did you see they're opening a Chick-fil-A at 12?
Oh, I did see that actually.
Now you sure you want to move, Spencer? There's gonna be a Chick-fil-A.
They're opening one right down the street from me.
Yeah,
but it won't be open for a few months.
And what's the other chicken stock? Tyson's been on a run too, right?
Yeah, Tyson.
Yeah, they both have.
But it's come off. It doesn't look as healthy.
Yep.
The other chicken stock is Beyond Meat, and it definitely doesn't look as healthy.
That's not a chicken.
$26 now, Beyond Meat. Wow. I guess it washed out to that $20 low. Holy mackerel.
I would just say watch out because the stock is still very highly shorted.
In the long run, though, and I'm going to say it here again, if you're buying a stock in your long-term portfolio for a short squeeze, you are in weak stocks overall. Because most of these stocks have a high short interest for a reason, is that the companies are struggling and the stocks are overvalued. And usually in the long run, the shorts win. So we heard about short squeezes and Beyond Meat at 100 and 120, and they happened. But in the long run, the shorts won. So don't stick around too long in those short squeeze stocks because eventually they get you. The shorts usually win in the long run. Sorry to say
We
that.
had them the other night, and I just like
They're pretty good,
I
Joel.
just piled on. You know what I did? I piled on the Thousand Island. I piled on low fat Thousand Island, lettuce, tomato,
Joel,
pickles.
you don't need it. It's pretty. I actually think the Beyond Meat burger is excellent as a veggie
Don't
burger.
eat the dogs.
It's like a
man.
really crappy hamburger, which is impressive when it's made out of vegetables. So I mean, I've actually liked the Beyond Meat burgers, but I go to the grocery store.
They're so expensive.
They're very
They're $7 in Canada for
Yeah.
2 of them. It's
Yeah.
$7.99.
Yeah,
I'm like, they're $4 a patty in Canada. I'm like,
Yeah.
I'm not paying that. So I would eat them more if they were half the price. They got to figure out how to make them cheaper.
That's it. All right.
And the valuation never made any sense. I mean, at the peak, I think it was worth more than Tyson Foods, which is just completely stupid.
Aren't they
So
doing
Beyond
something with
Meat,
McDonald's?
valuation matters in the long run. You got to look at valuation. Don't just go on a hot story and don't stick around too long, because eventually the story goes cold and eventually valuation matters, and this is what you get.
Lineage Impossible Meat's not public yet. But maybe
Hey, all right, guys. I got it. Didn't realize the
Done.
time. I got
9
to
o'clock.
hop.
Rolls hopping.
Okay.
it's 9 o'clock. That's a wrap for our show as well. So thanks to our guest, Sean Udall. Thanks to all of you in the chat. Thanks to Joel. Thanks to Dennis. We're going to end this show, send you over to live trading with Money Mitch, Zunaid, Ryan. Money Mitch is going to be live from like a Panera Bread or something like that, because he just moved to North Carolina, but does not have internet yet at his house.
He's live
So-
from Panera Bread.
so
Man, if
he-
that was still a stock.
Or maybe he's at Starbucks. I don't know where he's at.
Yeah.
He's somewhere. He's somewhere that's public. He's on public Wi-Fi. He's like, commandeered a booth or something. So we'll see.
Money Mitch.
It should be fun to watch him trade from a Panera / Starbucks / whatever they've got out there in North Carolina. That is our show for the day. I would very much appreciate it if you all would hit that like button. And hey, have you seen this page, benzinga.com/premarket? Someone in the chat asked earlier if there's a way to have the show open without having YouTube open. Yeah, the show airs on Twitter, Benzinga's Twitter account. The show airs on Benzinga's Twitch account. But the show also airs on this page, benzinga.com/premarket. The YouTube is embedded on that page. If you go there, you can see our show, see today's biggest movers, earnings, ratings, gainers, losers, the whole thing. So check it out. It's a redesigned page, and I'm a big fan. I've made that part of my morning routine. Any feedback for us, questions, comments, concerns, shoot us an email, shows@benzinga.com. And hey, if you want to email me personally for the next couple days, you can do so. This is my email up on the screen. This is my Benzinga email. I will lose access to this on Saturday. So if you want to email me now, it's right there on the screen. That thing right there. That guy. Yep. Okay. So we're done. That's a wrap. Live trading is next. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. I'll be back on Benzinga Live in a little bit. Everyone have a great rest of your day, and good luck at the open.